Hi friends, Simit here from InformedTrades.com. Today is Monday, July 21st, 2014. Time for our daily Forex chart review. In these sessions each day, I share the trades I'm placing, adjustments to existing positions that I put on in the markets. All of my trades are verified on my FX book. You can see the track record on my blog, also on myfxbook.com. A lot of the information I'm presenting may be unfamiliar to you. My style may be unfamiliar to you. If you check out InformedTrades.com, we have a huge archive of learning material, structured video lessons covering a wide variety of topics, not only the method I trade, but many other styles, many other markets. Check it out. Share your knowledge. Ask questions. We can all learn together. Let's get started right into it with a look at the charts. On the screen right now is a chart of gold. Gold has been in this range. We've talked about this for the past few months now because it's been in this training range. Really, I identify it, as you can see on the chart here, going back to March. I think, maybe late March, or you could maybe make a case that this level, this corner, was established on this long wick here. But really, when we broke down here on March 24th, since then we've sort of been in the range, mainly between 1270 and 1330. That's the way, we did peak out of it a little bit here, or a bigger move here. But really, 1270, 1330, 1270 tested, 1280 tested 1, 2, 3, 4 times here, 5 times you could say, even then again, 6 times. Now though, we're still in that range. We still haven't, 1330 tested once, twice here, still in that range. We are above the 50 simple moving average, and today it looks like we could get above the 200 exponential moving average. So I think that's key. If we close above the 200 exponential moving average, that puts the near-term range at 1310 to 1330. Of course, long-term, I'm still a fan, still like to accumulate. I think we're going to go much well past the 2011 highs of around 1920, September 2011. That's gold. Bitcoin. Okay, Bitcoin is right at its 50 simple moving average. The past couple of days, it's been trading in a tight range. I like to think that consolidation precedes a breakout. So to me, I'm still sort of thinking that a move in Bitcoin, a bigger move in Bitcoin is on its way. We are at the 50 simple moving average. As long as we're above the 50 simple moving average, and more importantly, point C here, which is $600, I think the trend is still bullish. So I still think we're on our way to 680, and I think the liftoff may be coming soon in light of the consolidation we're seeing. But we'll see. Definitely, if we close below the 50 simple moving average, that makes it a bit more bearish. And if we close below 600, then I think the trend is really bearish, and we might be on our way back to 522 or perhaps 560 first. So that's gold and Bitcoin. Bitcoin, again, I view for the longer term, I'm viewing it like an educated lottery ticket. I have a small position, so if I lose all my capital that I invest in Bitcoin, it won't be too much cause for concern. Of course, that's not preferred, but I'll be able to tolerate it. What we're really looking out for, though, is a big gain, preferably 10-to-1 returns. So I really like to see a Bitcoin price. I entered at 520. If it can go to 5,200, I think that's sort of the kind of move I'm looking for. Okay, now on to the Forex pairs. Let's start with Pound Canada. Okay, now Pound Canada, I am short this pair, and I de-risk this trade, perhaps a little prematurely. But once a trade's been on for a few days, generally I enter this trade right here on July 15th, I believe. So once it's on for 3 or 4 trading sessions, there should be some action should have occurred. Whether it hits my stop and I'm out of the trade, I de-risk the trade and I'm at break even. Or it's hit my profit, and that's sort of unlikely. Usually, if it's going in my favor, it takes a longer time for it to hit my profit. But it is in my favor. We are a little bit further down. We did have a somewhat of a larger candle. I wouldn't call it a huge candle, but a nice move down yesterday. So I decided to de-risk this trade. With de-risk means I put my stop, which was at 85.30 or something like that, 85.50 maybe, and then put it back to break even where I entered. So if price rallies and touches the point I entered, I'll be taken out of the trade. I won't lose any money, but I'll be out of the trade. So I've de-risked the trade in that regard. And what that does, or what's especially important about de-risking, in addition to removing the possibility of a loss, that also frees up risk capital, because I don't want to lose. If all my stops get hit, I don't want my account balance to fall more than 1%. So if a trade has not been de-risked, that counts towards that 1%. Once I de-risk a trade, I'm not going to lose any capital, so I can apply that risk to some other trade. And that's exactly what I did do, as we'll see in a moment. Okay, so that's Pound Canada. Let's go down the list. Let's go to, we'll deal with the yen trades a little later. Let's go to Kiwi dollar. Okay, so this trade, just to recap, the logic that I entered on Friday was, we're clearly in an uptrend. We pulled back in the uptrend to the support level. The support level was established here, June, established here, again earlier in June. It was a resistance level in May, also a resistance level in March. So this has been a resistance level that turned into a support level, and we formed I'd call this maybe I guess it's probably, at one point it would look like a hammer, but now it looks a little bit more like a doji candle right off support, and it's right near the 50 simple moving average. So we had three signs, price in an uptrend pulls back to support, 50 simple moving average, doji candlestick. Those are the three signs I need to enter. The doji, the support, the 50 simple moving average, price right there. So I entered at 86.68. My stop is at 86.14. This trade, I don't believe this trade has not been de-risked. Normally, what I like to do is when price closes at or above the orange line, which is usually a near-term resistance level, I like to de-risk the trade. Now, price did touch the orange line and bounce sharply down, so that tells me that some sellers were responding to that resistance level. But I haven't de-risked this trade yet. So far, so good. We'll wait a couple more. It's only been one day, so we'll see in a couple days where we're at. The target profit is resistance, the high set on July 11th at 88.32. That's Kiwi dollar. So far, so good on that. Now let's go to the yen trades. I'm seeing a lot of yen weakness. So hopefully, if you go to InformedTrades.com/Japan, we've outlined the case that many others have made as well for a bearish move in the Japanese yen, which means all the yen pairs will rally. Basically, Japan has the worst debt situation of any major economy. I think that's basically a mathematical fact. The question is, how long will the situation continue? And if it doesn't continue, what happens? I think that there's going to be a capital exodus from the Japanese yen. The Bank of Japan is going to have to be even more aggressive with their stimulus, although they are showing signs of tapering now. But in any event, looking at just the technicals, we're seeing a lot of weakness on the yen. Let's take a look at Canada yen. And if you recall, we were also short Pound Canada, so on long Canada yen. So I'm seeing signs of Canadian dollar strength as well as yen weakness. That makes Canada yen an appealing trade, although, ironically, of the four trades I have on, that one is the one that's floating loss. I entered at 94.33, small floating loss. You can see prices right near there. My stop loss at 93.86. This trade has not been de-risked. It'll be de-risked, as you can see, with this orange line here if price closes at or above 94.86. 50 simple moving averages here. And we've got support level that was basically this resistance level back here in April 3rd of 2014. So we'll see. This is just a matter of waiting. Obviously, we want to see it go into the money, but not much you can do just wait and be patient with the Canada yen. Aussie yen had a nice big move up. So this is and this also confirms whenever you see one big down candle and then one big up candle, or vice versa, it's called a tweezer pattern or a railroad pattern. That also is indicative of a potential reversal if you have other signs in play. Here we have, again, 50% Fibonacci retracement from this swing low to this swing high. Price is actually between the 50 simple moving average and the 200 exponential moving average. So a little not as glaringly bullish, but still, if you look at the moving averages, they're generally sloping upwards, especially the 200 exponential moving average. So I thought those were some valid signs. Price at support, the railroad pattern, 50% retracement. So that's basically where we're at. This position is a bit in the money, and it's near the orange line, near 95.25, which is the point at which I'll de-risk the trade. And I may have de-risked this trade already. Yes, I did. Okay, so actually what I did was I moved this up to here, And I did that a little prematurely, but again, you know, this trade has been on. When did I enter this trade? I may have entered it over here back in July 10th. I'm not sure. I don't think it's been on too long. But in any event, I thought it was appropriate to de-risk the trade, especially because sometimes, you know, if the market brings out some sellers here, it can go all the way back down. So we did get to this point, de-risk the trade. And if we look at the hourly chart, so I'd really like to see, you know, this level right here. Let's draw a quick line. I'll delete it in just a second. But I would like to see 94.91 serve as a support level that is defended. So if resistance is 95.24, I would like to see this as a support level. That way, if this acts as support and I've de-risked the trade, I'm still good. Okay, let's go back to the daily chart. That's all CN. That trade has been de-risked. Pound Canada has been de-risked. Canada yen and Kiwi dollar are the two trades I have on that have, that have not been de-risked. Now, I did put two additional orders on today that have not yet been filled. We're about 20 and 30 pips away from those being filled. One is Aussie Kiwi. Let's go with that. Now, if you recall, I was short Kiwi dollar, or excuse me, I was long Kiwi dollar, and I'm short Aussie Kiwi. So I'm seeing signs of strength in Kiwi. Kiwi is the New Zealand dollar. Short Aussie Kiwi. Here, this is a perfect setup, and this has everything, literally everything I look for. Oh, what happened here? Okay, well, that, let's see if I can, okay, we'll do this. TradingView apparently just collapsed on me, but I do have these trades documented on my blog. So let's look at them there, which isn't as nice visually, but it offers something. Okay. Here we go. Okay. Aussie Kiwi. Now this has everything that I like to see in a trade. We are in a clear trend. Clearly downtrend, prices below the 50-simple moving average and the 200 exponential moving average. We've pulled back from this swing high to this swing low 50%. You can see that here. That level coincides with a resistance level, which was established early July. It's also got the 50-simple moving average there, and today we have a doji candlestick pattern. So basically everything I look for is present. So that's a cue to short. I'm short at, what are the exact numbers? I'm short at Aussie Kiwi at 81 or 108.12, 1.0812. My stop is at 1.0844, 1.0629, and that gives me a reward risk of 5.7 to 1. So really nice. My stop is a little tight here, but I think when you have a perfect setup like this, or what I regard as a perfect setup, you can get away with having a little bit of a tight stop. And the reason for that is because you have so many signs that, so in order for the price to hit my stop, it still has to go through this resistance level, through the 50-simple moving average, has to overcome the validity of the doji candlestick. So I think there's a lot of signs here, and if you place it just a little bit above, all in that same point, you can get a good entry level. Okay, so that's Aussie Kiwi, which is definitely a really great setup. The only thing I'd like more is like a double doji or a triple doji. So if we see the same tight candles, tomorrow or maybe tomorrow and day after, that is really great. Now, normally I like to de-risk a trade really quickly, but if I see a double doji or a triple doji, that's the best. Then the market may really be gearing up for a move down. Okay, the other one is I did have 2 yen short trades, Aussie yen and Canada yen. One more, pound yen. This is long. When I say short the yen, I really mean long the yen pairs because, when you're speculating to go long pound yen, you're speculating that the pound will appreciate relative to the yen, or the yen will fall relative to the pound, which is what I'm expecting. I'm expecting the yen to fall against pound, Aussie, Canada. With this one here, 50% retracement, just like from this swing low to the swing high. We're at a support level. This was established back here. It was a resistance level here, here, here. You could even make a case here. So really a well-established resistance level. So now our price has fallen back there and is treating as support. We have a 50 simple moving average. Yesterday's candle, if you look at this greenish candle here, that looks like an inverted hammer at the support level. So that's another sign there. Inverted hammer, I'm going to interpret that as bull stepping in to create a little bit of a long wick there at this level. So I think it's a good level to enter at. Target profit is, I have it at 175. It says 25 here, but it's actually 175.27. And my stop is at 71.87. So this is not as great. This is still 3-to-1 reward risk, exactly 3-to-1. Normally I like a little more if I can, but 3-to-1 is my minimum. And this has all the signs I'm looking for also. Candlestick, inverted hammer at a support level, well-established support level, which is at the 50%, at the 61% Fibonacci retracement from this swing low to this swing high. It's also at the 50 simple moving average. So we'll see. Now it's just a matter of whether that trade gets filled. Still needs to fall 20 pips. That's a really thick line there, or excuse me, 15 pips. So we'll see if that occurs. Okay, and that is about it for the trades that I have on. I have 4 trades on. I de-risked 2 of those trades. I put 2 additional orders on. Those orders haven't gotten filled, but price is still pretty close to those orders, so they may get filled. It seems like they'll get filled. We'll see. That's about it. Any questions you have, anything you want to add, join us at InformedTrades.com. These trades are also documented on my blog there if you want to check it out, read my text, ask questions. We can discuss them. Best of luck in your trading, and we'll see you tomorrow. Take care.